Today, Bitcoin slips after key economic data shows inflation just won't fade away. Republican Senator Thom Tillis pushes for a light framework for crypto regulation. And Ari Juels of Chainlink Labs discusses what he thinks are the misleading narratives tied to the convergence of AI and blockchain technology. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies are slightly in the red this morning as Bitcoin stayed range-bound ahead of the widely anticipated halving event. The market got fresh inflation data showing consumer prices rose more than expected in March. That sign of lingering inflation pushed the market's expectations for rate cuts back to September, and that could be bad news for crypto, which thrives in a low-rate environment. The price of Bitcoin was little changed, however. It edged lower by less than 1% to the $68,000 level by noon Eastern. Ether fell more than 1% to under $3,500, and Solana lost about 2.5% to $167. Okay, let's talk about the top stories. Republican Senator Thom Tillis believes the crypto industry is in need of a light regulatory framework. In a Senate Banking Committee hearing yesterday, the lawmaker from North Carolina told Deputy Treasury Secretary Wally Adeyemo that he'd like to work with the agency to put clear rules in place ahead of the 2024 election.
The one thing I would tell people in the crypto or digital asset space that's saying, nothing to see here, everything's fine, they're wrong. There needs to be some light regulatory regimen put into place. Otherwise, there are risks. I, for one, would like to look at the possibility of working with your office to address some of the things in your punch list that we agree with so that we may be able to get regulations on the books in this Congress that will certainly not go as far as some of my colleagues on the other side of the aisle want to go, but far short of the wild, wild west that we find ourselves in now.
On Monday, Senator Tillis joined Republican Senator Bill Hagerty of Tennessee to draft the Enforce Act, which would tighten bank secrecy and anti-money laundering regulations for crypto and give clearer rules to the Treasury for its role in illicit crypto finance. And sticking with regulation and the upcoming election, Senator Cynthia Lummis thinks crypto will be a big issue in 2024. While speaking at the Bitcoin Policy Summit in D.C. yesterday, the Wyoming Republican said the Senate Banking Committee is an obstacle to crypto regulation, but that the upcoming election could change that. That committee is currently chaired by Democratic Senator Sherrod Brown of Ohio, who some view as a crypto skeptic. Senator Lummis said crypto would be a big issue in Senator Brown's re-election bid. Businessman Bernie Moreno is challenging Senator Brown, and he's seen as a crypto enthusiast who could shift the Senate's stance on crypto regulation. While speaking on the panel, Senator Lummis also pushed back on a 30% tax for Bitcoin miners proposed in the Biden administration's 2025 budget. Finally, shifting to ETFs, Hong Kong is reportedly close to approving spot Bitcoin products. Two sources told Reuters that the first approvals for spot Bitcoin ETFs are likely to be announced next week. Regulators reportedly sped up the process for these approvals to bring the ETFs to market much faster than the industry expected. Reuters reports that at least 4 Chinese and Hong Kong asset managers have submitted applications for these new funds. All right, for our main story, there has been a lot of buzz surrounding the merging of blockchain and AI in recent months. Crypto World's Talia Kaplan spoke with Ari Juels, author and chief scientist at Chainlink Labs, about the two technologies and why he thinks one key narrative could be hazardous.
There has been a lot of hype surrounding the convergence of AI and crypto recently. In fact, about 2 weeks ago, OKX Ventures released a report titled Unlocking the Infinite Potential of Crypto and AI. The report explores the merging of the two technologies, which is, quote, giving rise to new applications and innovations encompassing areas like model training, AI agents, metaverse, gaming, and robots as a service. You actually wrote an op-ed, which was published in February, where you acknowledged that the integration of blockchains and AI holds clear promise, but argued that the often touted uses for bringing the two together aren't actually all that useful. You go on to argue that one of the key narratives is potentially hazardous. Can you take us through that narrative and why you think that is?
Yeah, certainly. So there's a belief that blockchains can empower AI bots with money, which is certainly true, and that this is going to be an unalloyed good thing. And that really isn't true. In other words, I think there's insufficient attention paid to the potential dark side of combining these two technologies. Right? All of us worry about rogue AI, these nightmare scenarios in which an AI agent escapes its confines, breaks out of its cage, as it were, and in some way rampages through the real world. For example, we can imagine that an AI agent might somehow seize control of an autonomous weapons system or autonomous vehicles or take down the power grid. These are the types of Godzilla-like scenarios that people are worried about. And when it comes to the medium to long term, probably rightly worried about. But I think what often goes unrecognized is the fact that the financial system is also a potential vector of escape for AI agents. If you can control money, then you can control the real world. And so what we need to worry about, among other things, is the possibility of Godzilla with a wallet, if you will. Now, what happens, for example, if an AI agent were to start bribing people to gain control of critical systems or bribed people to commit crimes? Now, these are some of the possibilities if you bring these two technologies together in a haphazard way. And this is a concern that I think the industry needs to pay attention to. So there is tremendous potential in the combination of the two technologies, but there are risks that we need to acknowledge and take into account in a serious way.
Now, other narratives you point to in your op-ed include that blockchain can combat misinformation caused by generative AI and that blockchain can bring privacy to AI. Why do you believe those narratives are misleading?
Yeah, so in particular, blockchains are not magically going to enable us to distinguish deepfakes from real content. They can help, but they're simply not a full-blown solution. What they can provide are timestamps and audit trails for content. So if you, for instance, see a photo of a UFO hovering over the Washington Monument, say, blockchain may help you determine that the content, I won't even say photo because it could have been generated by an AI tool, but that this content was created before a certain time. And it might also help you determine that it was created by a particular entity, say by NBC. But what you don't get is a direct assurance that this thing is an actual photograph and that it wasn't doctored or produced by an AI tool. And the other thing that a blockchain isn't going to give you is the full context in which the image was produced. So maybe this is an image of an advanced new defense system that happened to be tested on a given day. So a blockchain isn't going to be able to tell you whether they're really aliens in Washington, D.C. Ultimately, you would need to rely on the claims of the producer of the content, for example, NBC. In other words, you don't get away with blockchains from a critical reliance on reputation over technology.
So what do you think is the solution to these, quote, misleading narratives as it pertains to AI and blockchain technology? In your op-ed, you argue that the blockchain industry and crypto enthusiasts will need to take AI safety seriously as a future concern and will need to consider mitigations like community-driven interventions or guardrails and oracles to help enforce AI safety. Can you expand on those thoughts?
Yes, it's early days. It's not entirely clear what the right mitigations are. But if we consider the possibility of AI agents accessing cryptocurrency in ways that are potentially damaging or detrimental, it makes sense to think about what the gatekeepers would be in an ecosystem of this kind. And one of the potential gatekeepers are oracle systems. Oracle systems are the systems that link blockchains, smart contracts in particular, to the real world. So they would be a natural point in which to deploy mitigations. Those mitigations could involve any of a number of things. They could involve guardrails like limits on the amount of money that can be sent, received, used in a particular way over a particular period of time. They could include the possibility of community interventions in the way that blockchain resources are used. As I said, it's early days, so it's not entirely clear yet what the right mitigations are. This is a topic for research and something that the community needs to take seriously and reflect on.
Now, I understand that you believe the hype around token prices skews the narrative when it comes to the promise of blockchain and the innovation that's happening at a deeper level. Why do you think that's the case? And what are some of those innovations that you think deserve more attention?
Today there are so many articles in the trade press and the popular press about the money side, if you will, of crypto, Web3, blockchain, prices whipping up and down, scammers like Sam Bankman-Fried, meme coins, and so on and so forth. And of course, today there are lots of articles about the upcoming Bitcoin halving and the effect that it might have on Bitcoin prices. All this is exciting and impactful, but from the perspective of a technologist, it's to some extent really froth on the surface of the industry. Imagine if astronomy were mostly about people making monetary bets on the discovery of new stars. The night sky would be stripped of much of its wonder and awe. Now, of course, the blockchain industry, blockchain technology is not the universe, but I think this analogy captures to some extent what's going on in the world of crypto. The innovations in the blockchain industry can be described in terms of the new functionality they bring, the new capabilities they bring to users, and in terms of the science behind them. In terms of the functional innovations, I think that smart contracts are a powerful tool whose full set of capabilities is not yet fully appreciated.
Now, Juels also discusses his new novel, which dives into the impact AI systems can have on blockchain innovation. You can check out the full interview over at cnbc.com/cryptoworld. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.